So welcome to a special edition of the Get Off My Lawn Records podcast. Get off my lawn! I'm Donald W. Moore. I'm sitting here with Steve Stern.
What's going on?
Still Stern, right? You didn't change it when you got married or nothing? Okay. Steve and I went to high school together. Steve still lives back in the part of the country where I'm from. So New York represent. Go Knicks.
Oh God.
I know it's a tough.
Are we gonna get in? Are we gonna get into Dolan and all on this, or because I don't know if I was prepared for that? You said there's no cursing on these podcasts, right?
I try not to curse. We
all
won't
right,
get
don't
into
bring
it.
Dolan up.
It's a couple. It's been a rough decade or so to be a Knicks fan.
I'd say so.
But the Rangers are a bright shining spot.
That they are. He hasn't screwed them up yet.
You know, and the Giants maybe.
Hey, 2 Super Bowls. I'll take it.
Yeah, there you go. Right, and
yeah,
the Jets kind of.
Nah, it's not so good.
Not so good
there. No.
The Nets will never be. Like,
no.
I look at
They're
all.
not even a real team.
I got my buddy. I got buddies in Brooklyn, and they all converted to Nets fans when they moved over. And I'm like, oh, boo.
Yeah.
What are you doing? You grew up on the Knicks.
I know, you can't do that. You can't make that change.
So,
you gotta stick with your team. I mean, listen, I stuck with the Mets all these years, so.
Well, I actually have a Mets bat in this room.
Do you?
Yeah.
All right.
For when the singer gets out of when the singer gets out of line.
We got this guy here.
Hey, there you go.
Yeah.
There you go.
All right.
So, Steve, you're a certified public accountant?
Correct.
And this is your practice. You had started a practice and merged with another practice?
Correct, exactly.
And that's Weiss Financial Advisory?
Well, it was actually two companies here.
Okay.
One company is Weiss Financial Group, which they do financial planning and asset management type stuff.
Yep.
And then the company I merged with was the Weiss Advisory Group when I came in. Now we're operating as Weiss Oro and Stern. So
that's better. Get your name on the door.
Exactly.
Now, one day it'll be Stern, Oro, and Weiss.
Now, you know what? The initials look good. The logo looks good. We wouldn't make that change anyway.
Gotcha. So you and I, we went to high school together. I think we went to elementary school.
Yeah, we go back to Van Court.
That's right. We went all the way up. We grew up in the same neighborhood. You're one of the my accountant is like, he's in his 80s.
That's how it basically works.
He's a Nigerian guy.
Okay.
And he teaches at the University of West Virginia now.
Okay.
And like I've been with him while he was getting his PhD, like in his 60s, 70s, he's getting his PhD. So now he teaches. I call him up. I'm like, "How's West Virginia?" He's like, "It's different.
It's definitely different.
It's different." And
well, speaking of people in their 80s, that's a running joke we have here. Whenever we have someone calling in saying they're interested in our services, this and that, we always ask, can we ask why are you switching accountants? And a lot of times the answer is, well, my accountant died. So
yeah,
that's pretty much it. So I said, all right, well, I'm 32 now, so I'm planning on being around for a little while longer. So you could put that in your back pocket for now.
That's right.
So that works out to my favor most of the time.
Yeah. And I still remember in high school you were the guy on the football team that was also smart.
I tried, yeah. Then the shots to the head started taking their toll, so it slowed down a little bit.
Oh yeah. That's awesome.
Yep.
So I wanted to talk to you about, because it's tax season, though.
It sure is.
And musicians have an especially complex tax thing because a self-employed musician doesn't have a single job. It's not like you get a W, like most people, they get a W whatever, a 10-9.
Yep.
Yeah, you fill out a W-2, you get a 10 something. And well, no, I guess the 10 somethings are what I'm always getting, but you fill out you get a form, they say, yeah, we withheld this much tax and you made this much money and we're giving you money back.
Right.
But that's not how it works with musicians. So
well, it's a mix. Yeah, it depends on how it's all set up. It could be a little bit of everything.
Right, and a lot of it's contract work.
Right.
So to walk everybody through, so contract work is like one-off work where they're not withholding taxes. You're not an employee. They're
Right.
paying you to provide a singular service.
Mm-hmm.
And then after that, you have to declare that income. Though they send you what, a W. Some of them have made me fill out a thing. I think it was a W-9.
W-9. You fill out the W-9 so that they have the information so that they can send you a 1099.
Okay.
So they send you the 1099, shows you how much they paid you basically for the year.
Yep.
When you're in that type of freelance work and the contract work like that, you actually need to file as if you're a self-employed individual. So it goes on Schedule C on the tax return, and you fill that out as if you yourself are an operating business, a sole proprietorship. So that's where you're essentially just laying out your income and expenses for the year. We can go into a little bit of the details of the expenses, or do you want to touch on the other types of arrangements first?
Well, the other things that happen with musicians, right, is you'll get residual checks from places like ASCAP, BMI, CSAC, maybe Sound Exchange. You know,
Okay.
your label might be sending you a royalty check.
Right.
But all of that stuff still comes in as like contract work. Like I don't think I have to withhold taxes on
Probably
royalty
not on
payments.
royalties.
Right.
No, they usually are structured as royalties, correct?
Right. It's almost
Right.
always structured as a royalty. Though somebody
Okay.
who's maybe teaching out of a school, then it really just depends on their agreement with the school, right?
Yep. You have a mix of stuff here going on because you have your performance stuff that you're doing
Yep.
as freelance work. Teaching's kind of a different line of income, although you can kind of merge everything together. The royalties actually get filed separately on a completely different form.
Really?
Of course. Yep. So the royalties come through as a Schedule E.
Schedule E.
Yes.
Okay.
So royalties get reported the same way that, as strange as this sounds, rental income would get reported. So it comes through as a royalty on Schedule E. And then again, if you have expenses specifically against those royalties anything you had to do to make sure that those royalties keep coming in, anything like that, that's where you would put those expenses, and then you would separate that out from all the other freelance contract work.
Gotcha. Yeah. So when you go and you have a bunch of expenses and you have a bunch of income, what I think you just told me is it's not all one big pool. That
Not when it's it's different when it's the royalties, just because they have to go to a completely different place on the tax return.
Right.
If it was all contract work, even the teaching stuff like that, if it's all freelance,
right.
you can kind of all merge that together, put it all together on one form rather than having to separate it all out. It's all treated the same other than the royalties. The royalties are treated differently. That's why you have to separate them out, because any net income after expenses that's left over from the freelance work, from performing, from teaching, things like that, is actually subject to self-employment taxes.
Right.
Which is nice, right? Because you think you've got this great situation where, I have my own business, I can write expenses off, and then you don't realize, well, if I was an employee, the employer would have to be paying half of these self-employment taxes, basically.
That's right.
So self-employment taxes are your Social Security and your Medicare taxes. That usually you'd see on a W-2 when you're a typical employee. You see your half coming out of your check. What you don't see is that the employer has to match it. So they're paying in the same amount. When you're self-employed, you pay both.
Right.
So you get hit from both sides. So the royalties are not subject to the self-employment taxes. That's why you separate them out so that you don't wind up paying extra taxes on that.
What taxes are the royalties subject to? Is that capital gains?
No, it's your regular ordinary income rates.
Oh,
So
okay.
whatever income tax rates your tax return is in for that year, the royalties will just kind of mix into that pool of income.
So it's considered like post-tax dollars.
Well,
Pre-tax dollars, I guess.
It's coming through basically the same way that wages would be taxed, the same way that any short-term dividends or capital gains would be taxed. So it's all subject to the regular tax brackets. It just goes into the pool of what they call ordinary income.
Gotcha.
And subject to those regular tax brackets. The difference with the self-employment stuff is that on top of your ordinary tax brackets, self-employment income is also subject to 15.3% self-employment tax.
Doesn't that seem weird?
Well, it's when you're an employee, they're taking 7.65% out.
Right.
They're taking that Social Security and the Medicare. The employer is paying the other half. You're self-employed. You're the employee and the employer, so they hit you on both ends. You do get an offsetting deduction.
There's an offsetting deduction. How
There's
much?
an offsetting deduction.
What is that?
Essentially half of your self-employment tax.
Oh, well then, so it's a wash.
But it doesn't work out exactly. It's not a complete wash.
Ah.
It's not an exact calculation there. They do their best to try to get it to where it would be fairly exact, but it's not a complete wash.
But what you're telling me is that the government is not creating a weird incentive to not self-employ by taxing you higher intentionally.
Right.
They're not intentionally taxing you higher.
Where it hurts is hypothetically of situations where people have a lot of other deductions,
Yeah.
mortgage interest, real estate taxes, things like that, where they may actually reduce their income down to almost nothing.
Right.
So they would not owe any taxes. But because they have self-employment income that's separate from everything else, they still have to pay the full self-employment tax of 15.3%. So the deduction doesn't help.
Huh.
So hypothetically, if you make $100,000 of self-employment income, you have the 15.3% self-employment tax.
Sure.
So that's $15,300.
Yep.
If the rest of your tax return brings your overall income down to zero, you still have to pay that $15,000.
But you don't.
But if you were an employee, you had the same situation, you would have paid half of that. You would have paid $7,650. Your employer would have paid the other half, and then you'd have no other taxes. So that's where it gets into situations where there's people who ultimately end up feeling like they pay more taxes than they would have. Now, the argument that some people make is if the employer didn't have would the employer be paying you more if they didn't have to pay the other half of the Social Security Medicare tax?
No, they wouldn't
Probably
pay you a
not,
dime
right?
more.
So as the self-employed person, you do kind of get, and the employer is getting that deduction as well for their half of the Social Security Medicare taxes. So,
that's true.
There are situations where people go into self-employment, they sit there and say, but ultimately at the end of the day, I didn't make any money this year.
Right.
But because that specific self-employment activity made money, they still have to shell out taxes at the end of the year.
Right. Well, and it puts a floor on the tax rate too.
Yeah.
And
yes,
so it
exactly.
creates everybody. It creates a disincentive to be self-employed, but then never make any money, quote unquote,
Right.
through fuzzy. The music business is so full of fuzzy accounting. But you're a sharp accountant.
Anytime you have freelance work,
Yeah.
that kind of goes hand in hand. I mean, that's the trade-off of having to pay the extra self-employment taxes is that you have the opportunity to write off deductions, and whenever somebody's given that voluntary opportunity to write things off, most people get a little greedy.
Well, let's talk. So that's a good segue, right? What is?
Yeah, there you go. Right.
What kind of things should a musician be deducting? I imagine your mileage to and from the gig.
Correct.
Right.
Any sort of travel stuff, mileage, tolls, parking, if you're taking mass transit, anything like that. So before we even get into the specifics, anytime you are considered a business, which as a freelance
You're always a
performing
business.
artist, you're a business at
Yep.
that point. Anything directly related to operating, maintaining, advertising, anything related to that business is generally deductible. So I'll give you an example before we get into the specifics
Okay.
of there's a situation we've read about from the tax courts where there was a woman who was a stripper. She was a performer. She actually won a case against the tax courts, against the IRS, because they audited her and they threw out deductions. She was taking deductions for plastic surgery, for enhancing herself.
Oh,
And
in that line of work, I imagine that is sounds like a totally valid expense in that line of work.
she won
Yeah.
because she proved that her income increased as she increased
As she's
in a
as
certain
she
size.
yeah, as she spent money on changing things, it went up.
So at
Yeah.
the end of the day, if you can prove that the deductions are reasonable and necessary, that's actually the language used in the tax code, reasonable and necessary, you can take the deduction. Will you be potentially questioned in a random audit or something like that? Yes, happens frequently. However, if you can make the argument and you can prove that this is reasonable and necessary, especially if you can prove that I generated additional income because I spent this money, you would win that argument.
That makes
So,
sense. Yeah, you're gonna have a hard time arguing taking deductions for things where you're not making money.
exactly. But if you can prove that I have to do this because this is a common thing that we have to spend money on. Now, obviously, illegal activities you
Yeah.
can't take deductions for, things like that. There are specific things. It's actually a little easier to go through specific things that you can't deduct. So you would
Okay.
think as a performing artist, maintaining your appearance, getting a haircut, getting your beard trimmed, clothing, things like that. You would think that that's something that would be deductible,
Sure.
but it's not. Those are still considered personal expenses
Really?
because you would most likely be doing those things regardless of the fact that you're a performing artist, right?
Well, I
So
imagine. So, for example, I don't wear this jacket.
you would make the argument that this was specifically a costume for
Right.
performing, right?
Yeah,
But
so-
if you just buy the hat that you're wearing, you could wear that at all times. You probably do wear that frequently. You're not going to try to write that off. The sunglasses, if you say I only wear these for performances, you make that argument. And again, we're talking about small dollar amounts right now, right?
Right.
It's
Unless
when you
you're
get into
like-
larger things like I need a Corvette to drive to my appearances. You better have a good argument for that, you know.
Huh.
You could now if you are making enough money where you say I have to keep up appearances and things like that. So that's the type of vehicle I need to drive. You might get away with that argument, but
Huh.
if you're making $5,000 a year as a performing artist, you don't try and write off the Corvette.
That makes sense. Yeah.
Right. So things that are specific to a performing artist. I do have a friend of mine who is in a band who I actually have been doing the band actually has a corporation set up that I take care of the taxes for every year.
Well,
So
and that helps.
We've gone through the travel and the mileage and things like that. Payments for recording fees, payments to an agent, commissions to a manager, any sort of promotional expenses, business cards, flyers, posters,
Facebook ads. Yep.
what else? Let's see. Like I said, with costumes, if you do have like a costume that you say, I don't wear this all the time. This is what I wear to perform. That's it.
Right.
Not only purchasing the costumes, but maintaining. If you get it dry cleaned.
This is dry clean only.
I
Yeah.
I would think so.
Yep.
So, when we were talking about personal appearance, stage makeup.
Yeah.
If you do any sort of stage makeup or something like that, that's different from just the typical makeup that would be bought from Sephora or Ulta or whatever it is for your everyday use.
Right.
That's different from stuff you'd be using on stage.
Now I have one for you. So
Sure.
I think the audience then understands if it's a reasonable it's something very specific to putting on a performance or making money,
Right.
and it and it has to be reasonable. Sure. But now, for example, with I lost it. I might have to edit that out. No, but I mean, so I see a lot of sales, and they, especially like, December 25 to 31, they're like, buy all the gear you want in the last few days of the tax year.
Right.
There's some pitfalls though to buying equipment specifically to use, especially if you intend to sell it.
Yes.
So
Well, if you're talking about buying equipment to sell, that's different than if you were buying.
what I'm describing is, I'm going to buy this guitar. It's a good guitar. I'll play it for a few years and then I'll sell it for a little less or I'll sell it for more, because musicians we're a lot of guitar players have a lot of guitars, right? They get
Yep.
traded around. And so sometimes guys go and they buy guitars to own temporarily, kind of speculate on the price. But don't you have to, if you're going to deduct it as an expense, don't you have to then depreciate it?
So depends on how much you spent. You have a reasonable you have a little leeway
Okay.
of things that you need to depreciate versus things you can take a current expense for. You also, if you're buying new, you could take what they call Section 179 deduction, which is a depreciation, but it's 100% of the purchase price. So you can take it as an expense in the first year. Now, what happens is with something that's related to a business, anything you're taking a deduction for, if you sell it in the future, that becomes income when you sell it at that point.
Right.
So whatever you've deducted, so if you are depreciating, then the portion of it that you've depreciated compared to what you sold it for, that difference winds up being what you have to actually reclaim as income later on. Now, if you take the full thing as a deduction and you sell it later, whatever you sell it for, that becomes income later on. Different from if you just bought a guitar for your own personal use. If it didn't go up in value when you sold it, if it didn't appreciate and you sold it for a gain, and I'm talking by the book, I don't know anybody who would actually voluntarily report income for a guitar they sold for more money than they bought it for. But
unless it was highly publicized.
Exactly. Unless you're talking about a significant gain, something that appreciated in value a significant amount, something like that. When it's a personal use item and you haven't taken a deduction for it, there's no income to pick up at that point.
Right.
You spend money, you didn't get a tax break for buying that guitar, so you're not going to pick up income later on when you resell it. But when it's a business item that you've taken a deduction for, if you do resell that item later on, you have to pick up income.
That makes sense. Now, you said your buddy's band is a corporation. What are the benefits of incorporating as a band?
Well, the first part was there's the 4 guys in the band. Okay. So rather than having to try to divvy up all of their stuff individually, it makes it easier when they're getting paid for gigs and things like that. The companies, the management company, whoever's handling it, is paying them one check. When they're being paid royalties, they're paying them one check. It's going to the corporation. They don't have to worry about money going to some pooled account somewhere and being divvied up, and then worrying about how do we spend the money for the expenses, renting cars. They actually go and perform over in Europe, so all of the flights and everything else like that. When you have 4 members of the band, it's easier to have that one entity that you can have a credit card in the entity's name, a bank account in the entity's name, and then the money goes into that entity and all the expenses are paid for and dispersed out of that entity.
And it probably makes keeping track of what's personal expense and what's...
Exactly. Yeah, that anytime you're even a freelancer, you should have a separate account or a separate credit card that you use specifically for your business stuff. Because I can tell you, we've got going through a couple audits for clients. If you try to claim that, I have somebody who was an entity and they did have some things that they had paid for on a personal credit card. Well, because I took that deduction and during the audit I said, those were personal. You won't see those on the business card. They paid for it with personal funds. Well, guess what? That opens it up to where the auditor says, fine, I need to see all of your personal bank statements, all of your personal credit cards, blah, blah, blah. And you know what? At that point I said, you know what? Just throw those deductions out. Don't worry about it. I'm not going to get all I'm not going to get all those statements. It's going to be too time consuming, whatever it is. Because I don't look at personal stuff for the clients, for their business.
Right.
I don't want to know what they're spending their money on. And I don't want an auditor to know either. So, that's why it's good to keep those separate accounts.
That makes sense.
Yeah.
But an individual musician, you could also do a DBA to set up a separate account.
DBA is the same concept as sole proprietor, as operating under your own name. The DBA gives you, again, doing business as is the DBA. So it just gives you the opportunity to actually market under a different name.
Right.
It could be a stage name. It could be a band name, whatever it is.
Yeah, there's a lot of that. What else? I'm trying to think. What else have you run into?
Well, I was going to say the other types of expenses that you might not think of. as long as you are performing and generating income as a performing artist, if you're taking any kind of vocal lessons
Yeah.
or doing any sort of continuing education in that sense, where you're practicing your craft or learning something new, and the whole purpose of it is to increase the performance aspect. Maybe it's dance lessons, something like that. That it's not just playing the music. I need to perform. That type of stuff is deductible. You could even get away potentially with thinking about subscribing to magazines or certain TV channels or something like that you're doing research. You need to listen to. So I wouldn't say MTV anymore because I don't even know if they play music anymore. But
They don't. Well, they will on the episode of Teen Mom I'm going to be on.
But I got to remember to DVR that for sure.
Yeah. I don't have cable. I don't know. I will see it when I see it.
I got to find out. I got to DVR that.
Yeah.
But if you think about it, if it's subscribing to Sirius XM radio or paying for Pandora or Spotify, and you can justify that. Listen, I have to listen to this type of music. I need to have access to it because I need to know what's being done, what's new, what's fresh, what kind of music is played. If I put in the jazz station on Pandora, well, what's being played? Right. I need to know what's being played. Why are they getting played in their whatever Pandora's algorithm is? Why is that being played over something more similar to the type of jazz I play? So, that type of stuff. Again, I'm talking in the sense of if I'm trying to justify it, that's what I'm saying when I'm trying to justify it.
And just so everybody who's watching, I think you're going to have an easier time justifying a subscription to Spotify or Apple Music than you will try to write off all your records you buy this year.
Yeah, well, you know what? You still.
But I bet that you could make the argument that if it wasn't available on the subscription services,
right,
then you could, in theory, write it off for research purposes because you couldn't get it through a less expensive means.
And it's not the in that case, as long as it doesn't seem like you're just building a collection. Yeah. Rather than doing research, even buying records wouldn't be, it would be hard to argue against that it's not a deductible expense. Now, if you're a jazz musician and you're buying, I don't know, let's just think of a type of music. If you're buying pop music or heavy metal or something like that, although you might be saying, I want to work some elements of this into my music somehow. Again, it's all about you justifying it. Now, if you know for a fact I'm just buying these records because I'm just collecting records, listen, I mean, you could try and throw it on your tax return. The likelihood of an audit is very low, but at the end of the day, if you get caught and you can't justify it, you're going to have to write a check. That's how it works.
Yep, that makes sense. And also, let's say you did that, you go through the audit, and then they decide you have to write a check. Is there any penalties for having had to go through the audit?
There are, but in some cases, if it just seems as more of a, I didn't realize I couldn't deduct these records. I thought I was able to deduct this as research. Or, sometimes it's just I can't find the receipt for it. I took this deduction, but I can't find the receipt for it or something like that. Those types of things, as long as it doesn't look egregious and as long as you don't seem like you were intentionally underpaying taxes, they'll waive a lot of the substantial penalties.
Gotcha. And obviously, I mean, when you say things like buy the book, if you're aware of it, you should deal with it, right? Because the way I've always looked at it, so let's take a minute, because I also know you and we differ in views in many things.
Sometimes.
So, but the way I look at it, every year I get a tax bill. A lot of my viewers, they get a tax return that the government had withheld too much money from their paycheck.
Correct.
So here's some of your money back. I don't get that. I get a bill, and I got to write a check every year. And I find, especially once you're in that process, I notice people's political views change very starkly once you cross there. And I kind of understand why people go, well, hold on now, wait a minute, I'm writing a check, I want to make sure my money is being spent appropriately, and I'm weird about this, that, and the other thing. But I've always looked at paying taxes as the civic duty. Like,
I'll tell you a secret.
Yeah.
At the end of the day, whether you're getting a refund or writing a check doesn't mean a damn thing, because there's a line on your tax return that says total tax, and you and the person who's getting a refund can have that exact same line, and you could have the exact same line that says total taxable income.
Right.
If those two are the same and that other person just prepaid more money than you did, they're getting a refund, right? So even the people who are writing the checks and might have that mindset of, well, I write a check every year, right, so I want to know where my money's going. Well, you know what? The other person paid just as much tax as you did. They just paid too much in during the year, right? I crack a joke with at least one person a year. I'm a little bit of a snarky smartass. I can't help myself. When somebody complains to me about the size of their refund, and I'm trying to explain, no, this is actually good that you came close to breaking even. That means you had more of your paycheck available to you during the year
when you really needed
an interest-free loan to the government.
Right.
And sometimes people don't want to hear that. So I said, you know what? I said this to one person last year. I said, if I told you I can get you $1 million refund, will you do what I tell you? Yeah, sure. Of course. I said, all right, what I need you to do is I'm going to put you on extension, and I need you to write a check for $1 million with your extension. When we turn around and file your tax return, you're going to get $1 million refund.
Yep.
And that's it. People don't understand in most cases that the refund is exactly what it means, the word refund. It's your own money that you paid too much of during the year that they're giving back to you. Some people use it as forced savings.
Yeah.
I look at it as I'd rather pay a little money at the end of the year and have more of my own money available to me throughout the year. God forbid something happens, you want to have that cash available. You need to make payments for things, whatever it is. I'll take my chances if I owe a little money to the IRS at the end of the year, and I'll come up with it one way or another. You have options these days now. You could even pay it on a credit card if you have to. So if you get into that circumstance, now you don't want to leave an enormous burden in April to pay every year, because you're eventually going to be paying penalties on that, because there's a certain minimum you have to pay in every year. But the refund means nothing. If you're getting a refund, again, it just means you gave them too much of your money throughout the year.
Yeah.
And they're just giving it back to you when you file your tax return.
Yeah.
So I've tried. I have people who get $10,000, $12,000, $15,000 refunds every year, and I go, you realize you could have an extra $1,000 a month coming into your paycheck. I just make this adjustment. No, I don't want to. I said, no, most of the time I say,
I just want to go take a nice vacation. They
use that. And you know what? At a certain point, if that's your mindset that, listen, it's forced savings for me and I earmark that money for a vacation every year. All right, I guess that's it. But the problem happens when something changes with their situation, and now they don't get the $15,000 refund. They get a $5,000 refund, right? And they were counting on that money. That's where I run into issues, where it's difficult to explain sometimes. And I try not to get too technical with people, but at a certain point, it's like, listen, it's a refund. It's your own money you're getting back. If you're getting $15,000 back, you could have had that money throughout the year. But some people say I'd spend it if I had it. So.
Well, and then they spend it when they get it back, too.
They get it back and they spend it. Some people actually set it aside. They'll put it in a savings account or something like that.
That's a good way of looking at it. Yeah,
but if that's the case, then you could have been saving it earlier.
Right. So and earning interest while you were saving it.
Exactly. Well, these days, not too much interest being earned on anything.
Not on anything safe. That's true.
Yeah.
Does the financial advisory side, do they still act as fiduciary?
They do.
Good.
They have. I don't know how many years they've had this structure, but they've been a fee-only financial advisor. They're a registered investment advisor. You might hear RIA is the abbreviation. They're an RIA, which means from the get-go they've said I'm a fiduciary. So they have very strict rules they have to follow. When they meet Don Moore and his wife for the first time and they're talking about investments or retirement or anything like that, if you and your wife say, listen, I have zero tolerance for fluctuations in the market, for risks, for whatever it is, if they're managing your assets, they cannot take unnecessary risks with your money. They have to follow what you're comfortable with, go through with you how they're going to invest the money, and explain to you that listen, you might not see 8%, 10%, 12% returns because we're not taking any risk here, but you're also not going to see a 7% loss in a year. Right. But they have to know that you understand that, you're comfortable with that. And, in some cases, they might just say, listen, you should probably just park your money in an annuity or something like that, create a pension for yourself, because if you don't have any risk tolerance, you don't want your money in the market, So they've had that responsibility from the get-go.
That's good. Yeah. Because I heard the rule that they're working on, that they dropped that rule out of Dodd-Frank. Or that they're working on.
It wasn't in Dodd-Frank. It was a Department of Labor rule that was passed last year that was supposed to kick in April. It didn't. It wasn't going to affect my partners.
Because they were already fiduciaries.
They were already taking on that fiduciary responsibility. Unfortunately, with a lot of these rules, it sounds good on the surface. Of course, it sounds good that somebody should be responsible for doing things in your best interest. I mean, I think the problem I see is that shouldn't be something that needs to be legislated. That should be just good business practices, obviously. However, it doesn't affect
when there's like so many bad. So I'm with you on that in theory. But and then when the businesses act badly, then it's time to legislate.
But the problem is that there's so many. What this is really targeting is more the commission-based people, right? And there are plenty of ethical commission-based advisors.
Sure.
The problem is you have an inherent conflict of interest in anything commission-based. If there's right off the bat, if there's two products that are completely equal, same returns, same cost to the customer, everything, and one of them is paying you a larger commission, why wouldn't you go with the larger commission? But on the surface, God forbid something goes wrong with that investment. Now it's, well, did you put me in this investment because it was a larger commission? So it affects the commission-based people a little more. It affects fees for like trading and brokerage fees and things like that, which are kind of buried sometimes.
Oh yeah.
When you buy hypothetically a Vanguard fund, and you say, well, I'm not paying a fee to an advisor to manage my money. No, it's already in the numbers, right? If you look at the prospectus, there's someone managing that fund who's charging a 1.25% fee, whatever it is. I think that's good. I think there was part of the rule that said that needs to be a little more transparent. That's a good thing. That's not, somebody should know up front that, like, listen, you're technically making 1% more than what's showing on your statement, but it's being paid to a fund manager, and that's fine. If somebody is earning money for you, I don't care what it is. If they're earning you 4% and if you got to pay them 1%, you still made 3% at the end of the day, right?
I agree.
On commission-based products, if your net worth, if your wealth grew regardless, and somebody made a commission that you didn't have to pay out of pocket, who cares at the end of the day? But like you said, it's always the bad people, right? It's always the ones who aren't doing the right thing that cause the problems. And to wrap it up, what I was getting at about where it becomes an issue with legislation, well, I don't know if you knew this, but all of the big four investment banks got all of their proprietary products exempted from the rule. So who's it hurt?
Of course they did. Oh.
So at the end of the day, what happens is
it only hurts the little guy.
Dodd-Frank, right? Wells Fargo doesn't get hurt by Dodd-Frank. Putnam County Savings Bank gets hurt by Dodd-Frank because now the cost for them just to stay in compliance is so astronomical compared to the amount of business they do as a local bank that Wells Fargo already knew what the rule was going to be before it got passed. They had their attorneys on it. They have entire teams of people that handle the internal audit procedures and things like that. They can absorb that cost. Doesn't affect them. And what they did in the process, it may hurt them in the short term, but they're pushing local banks out of business.
Right.
Same thing with this type of rule.
Because then Putnam County Savings Bank will close down and a Wells Fargo will open in that building.
And what's going to happen? A Merrill Lynch, a Goldman Sachs, something like that is going to absorb all these little individual shops that were doing fine, but now they can't keep up with the compliance. They can't operate like this. I'm thinking of one company in particular that I know. Listen, they make a lot of money. I don't know if you know what people make off life insurance commissions, but it's a significant amount of money up front, right?
It's a huge amount of money.
That rule affects commissions on life insurance, right? So if there's a if a life insurance company starts offering a different product which has a lower commission up front and a higher cash value for the customer, of course, the responsible thing to do is to now put that person into that policy rather than the one that pays the high commission up front. But what happens? This is how it's been going on for 20, 30, 40 years or whatever it is. So companies that are used to making a certain amount of money per year on new policies and now got cut 80% for that first year, and it gets broken. So you might have businesses that are going to get put out of business. They have to cut staff or whatever it is, or they get absorbed by one of the big guys.
Well, and that's really...
You don't feel sorry for the person who was making, I don't know, $2 million and now they're making only $400,000 in that first year.
Yeah.
But at the same time, if you just think about it as if I'm doing business and then my revenues get cut 80% because of a new law, that's going to potentially put me out of business at that point.
Well, and just to point it out, like YouTube, for example, every time YouTube makes an algorithm change...
Oh, right.
Everybody freaks out and one channel will blow up and everybody else's crashes.
Right.
It's that at the end of the day, if you can divorce yourself from the personal stories, it's that economic creative destruction. And I do have a hard time crying, but at the same time, where I'm upset is when the big guys exempt themselves and then hurt the little guys. I'm not down to throw the baby out with the bathwater. I'm saying everybody, no exemptions. Everybody plays by the same rule, big or small. And then
that's ultimately the problem with a lot of these rules that are drawn up. Again, to the consumer, they sound great, right? I mean, of course I want somebody to have the responsibility to do the right thing by me. That law, should go unsaid. I thought that's why I'm hiring you. You're supposed to do the right thing for me. I didn't think you're doing the right thing for yourself and I'm an afterthought, right?
Right.
But as soon as you start seeing the details of things where, okay, wait a minute, all of the big four investment banks got all of their proprietary products exempted from this rule. Hold on a second. How does that work? And then
here's how that works.
Next step, and you start thinking about it. They're probably pushing for this rule to get passed because it's going to knock out all the smaller guys.
Yep.
Or they're going to absorb all the smaller guys. That happens in my industry as well as a CPA. Our 5-person shop here, I have to follow the same rules as PricewaterhouseCoopers, right?
Well, oh God, yeah.
It's a completely different animal. I'm not dealing with AIG is not my client. It's XYZ Construction down the road who's my client. Now we have a range of clientele, some larger companies, more wealthier individuals, things like that. But the bulk of our business around here, the area.
Yeah.
A lot of blue collar, a lot of, there's some upper middle class families, a little below middle class families. Why I shouldn't have to follow the same regulatory rules with that small of a business than somebody who's working with AIG. And I'm not talking from an ethical standpoint.
Let me propose a different idea though. How about you do have to follow the same rules, but then the smaller shops are provided some kind of assistance.
Well, I'll give you an example, and then you could weigh on it, right?
Okay.
So if you're my client and you're a fairly successful performing artist, you make enough to do it full time, support your family. You want to go buy a house. You go to the bank to get a mortgage. The bank has a little checklist that they follow that says, I need you to get your accountant to write a letter saying XYZ, saying that you're self-employed, saying that you made this much money last year and whatever. First of all, I turn around and I say, you have his tax return. You don't need me to say how much money he made. You're looking at the tax return, right? But they are trying to push liability off on me.
Right.
For a long time, most accountants and I think a lot of smaller firms now are still writing, okay, whatever. They write the letter for the client, right? It's really stupid that I can't write a letter saying, yeah, he's self-employed. But I actually have to follow the rules of the AICPA that say you can't verify or confirm anything unless you do a significant amount of due diligence procedures to actually confirm that information. And besides that, it's better for you to just not confirm anything ever, right? So I have somebody coming to me saying they won't give me the mortgage if you don't write this letter. And I have to turn around and say, I'm sorry.
I can't write the letter.
I can't do it. My insurance tells me not to write it. My professional society tells me not to write it. You know why? Because all the big firms are doing audits, are doing all kinds of significant due diligence procedures for the people who need these types of letters and things like that. So they don't even need a letter. They have an audited financial statement. So when I tell the client, listen, what I can do is I have to do a financial statement for you, right? Well, okay, do that then. Well, hold on a second. It's a significant procedure. It's going to cost you at least $1,500 more.
What?
I can't afford to pay that. I'm like, I understand. That's why I don't want to make you do this, but I can't write the letter. I'm sorry.
Well, here's the thing though. Somebody who's a full-time working musician, anybody who's been doing it a long time will tell you, just because you're making some good money today, and it seems like, oh yeah, now's a great time. The ups and downs are way hard. Like,
I can imagine.
Like, if you're full-time, you don't want to be bogged down with a mortgage anyway, because your situation could change on a moment's notice.
Right.
And that part gets really hard for people to understand. But if you keep at it and you just continue to save, you'll pay cash for the house. Yeah, and then you'll ultimately get a better deal because you're a cash offer.
And then you don't need a letter from your accountant.
You don't need a letter from your accountant. You're gonna get all sorts of, like, yeah, okay, I get to deduct my interest rate on my mortgage, sure, but that's not.
Well, no. Again, you're paying $1 of interest to save 20 cents in taxes, right? So ultimately, you don't want to have that interest.
Right. So that's like all those guys that are somebody who's in that situation. The best response is keep renting, save, and then buy a house straight cash.
You know how hard that is, though, to say that to somebody, right? That's the American dream, is to go buy a house. So as soon as someone has a steady job, some steady income, whatever it is, first thing they want to do is buy a house. And don't forget, too, around here rents are high. You know, in some circumstances, in some areas,
the price of houses.
It is. You're right.
And they're linear. The rents are just as high as the houses.
Most of the time, people don't think about the additional costs that come with home ownership.
Yeah,
but
that's true.
If they're sitting there being told, well, your mortgage payment is going to be $1,700 a month, and they're sitting there going, well, I was paying $1,650 a month in rent, so I might as well pay $1,700 to own something. But then they don't think about, well, when the roof goes, you got to pay the money to buy the roof. When your hot water tank stops working, you got to buy a new hot water tank. So,
they do make a thing called a home warranty.
Yeah, right. But I never I don't trust warranties.
Well, a warranty's an insurance policy, right? So I buy an insurance product, and it's like $500 a year. Though my house is kind of inexpensive because I'm in Texas. But there's a bunch of companies that do this, and you can really only do it right when you buy the house.
Right.
And I don't remember if they send their own inspector or if they have a list of certified inspectors.
They probably have a list of certified inspectors, I would think.
But there's an inspector who comes and does the due diligence on the house for that insurance company. And then, it's like $50, $75, somewhere between $50 and $75 for every claim. And, if my water heater goes, they put a new one in.
It's great.
It's the way to go. I recommend, especially if you're in a situation where if you're going to need a roof, though I don't think the roof's covered. But, if you're going to...
It's probably the mechanical stuff that's, it's still a decent chunk of change to replace, but it's also not, a $10,000, $15,000 roof or whatever it is,
Though I think the foundations are covered in these.
That would be good.
Yeah. I would have to look at...
That's major work.
I would, yeah. Well, and out here in Texas, it's a much more common thing. Up there, it's all rock.
Yeah.
You guys are on mountain, and it just kind of, there's bedrock everywhere, so everything goes...
the only people that have the problem are in the, flood areas and stuff like that.
Right, because they're sitting on really, really soft soil.
Exactly.
Yeah.
So.
Awesome. So
there's one more thing, actually.
What am I missing? Yeah.
with the performing artist stuff. They're for the people who are W-2, who are, I don't know how common this is, but
The
for
part-timer.
any time of part-timers as employees, they get paid as a W-2. You take all of your expenses as itemized deductions. So
Okay.
it goes on your Schedule A. Now, where you get hurt, if you're not a homeowner and you don't have all those other expenses, then you get the greater of a standard deduction or your itemized deductions.
See, I'm a
So,
homeowner and I still take the standard deduction.
okay, then there you go. Well, that's, big difference. If you're in New York,
Yeah,
probably
because
that same house, you probably be paying $9,000-10,000 a year in real estate taxes, and right then and there, you're going to be pushed into, and you don't have state taxes in Texas, right?
we pay a 3% property tax,
Okay,
and we have an 8, like right in this county we have an 8.25% sales tax. So all
sales
that's the
tax,
same.
right?
We don't have that
You
state
don't have an
income
income
tax.
tax, right?
There's no state income tax, but there's
Yeah.
toll roads.
So what's the big thing when you're a New York resident, especially in the area where we grew up around here, high property taxes. You're paying a fairly high New York State income tax,
It's not
also,
that
which
high.
is, well, I mean, if you add on to everything else, you can get up to an additional 8+% on your income tax for the state of New York when you take into account in this area when you're paying $10,000-15,000 a year in property taxes, you've got 8% in sales tax, and you've got what's the percent? I think you pay a 1% mortgage tax. I don't know if you guys have that down in Texas, but
I'm
when
not
you
sure.
go just to get a mortgage, I pay 1% of the size of the mortgage as a closing cost to the state of New York.
Really?
So that, yep. So
Oh
it's,
yeah, no, we had a big. I mean, it was I remember the closing costs were pretty significant. In
yeah, one of the
comparison to
big
price of the
items
house.
that's in the closing costs around here, and Westchester actually charges a little more than the 1%
Of
too.
course they
Of
do.
course, right?
Of course they do.
So anyway, but when you take into account all that, state income taxes are actually a federal itemized deduction. So when you
Exactly.
take all property taxes, mortgage interest, all that, and then you're a performing artist on top of that who's getting paid as a W-2, you might be able to get additional benefit from your expenses that you pay as a performing artist. And then there's a special rule for performing artists. If you make, I think you have to receive income from more than one source. So you have to get more than one W-2. It needs to be over $200 from each one, and you can't make, well, this is the kicker, right? You can't make more than $16,000 for the year total. So if you're
Taxable.
of adjusted gross income,
Yep.
so just your total income. If you're under that 16,000 and you have more than one source that's over $200 as a W-2, you can actually take what's called an above the line deduction. So it's not on your Schedule A itemized deductions. You can actually take it on page 1 of the tax return. The benefit being that if you're a standard deduction person, you're still getting the benefit of the expenses for being a performing artist.
That
But
makes sense. And that sounds what you just described sounds like a rule meant for part-timers.
exactly. I mean, if you, again, it says you don't have to be under 16,000 from performing arts. You have to be under 16,000 total income for the year across the board. So
Oh
I don't know
wow.
how many people fall into that bucket to get that special tax deduction treatment,
I
but
I imagine it would be the stay-at-home mom that does a couple gigs on weekends and stuff.
and she has to be single at that point too, because there can't be another source of income on that tax return.
You know, I would be totally down for this if public housing and things were available for musicians. God, that's nutty.
You know what? The tax code at the end of the day is so convoluted. I forgot how many pages are in the tax code.
Oh,
But
too many.
there's so many rules, there's so many intricacies. You get on, we get on the phone with the IRS, and there's times where we're arguing. You're wrong. Like this is crazy. But what happens is unless you want to take it to the next level and get attorneys and courts involved and stuff like that, at a certain point you just give up and you say, you know what, just we'll pay it and we'll cover some of the costs for you. It's crazy. The amount of time that it takes just to get them on the phone at this point is
Well,
ridiculous.
I blame one specific party for continually cutting the cutting their resources because they
I
don't.
think they still have plenty of people. They've got plenty of people there. You know what? Uncomplicate the tax code, and then we don't have to worry about it so much. You don't need as
I'm
many
on board with
auditors,
that.
and there won't be as many people making phone calls if you uncomplicate the tax code a little. Just a little bit. Just give me a little bit. That's all. Every year when they come up with new rules, changes, whatever it is, they don't uncomplicate anything. They add new intricacies, new. Okay, you can still do this, but now there's a threshold that if you reach it, then it gets reduced. Oh my God, it gets crazy.
But
That's why the software companies make so much money, because who the hell could do all this math in their head on a tax return these days?
there's that. Well, that and also it's probably easy to implement those kinds of changes on software.
You'd be surprised. We use one of the larger tax softwares, even
Yeah.
for like we're a small firm, but we
You use
said,
the big boy tool.
yeah, we invest in the right software, right?
I don't know what that's like at all.
They, I bet. Yeah. I'm looking in your room there. I've seen some of your other podcasts. I see a lot of equipment in there.
Yeah,
But
and I own all of it.
you'd be surprised how many updates get pushed through during tax season when we've already processed tax returns and sent them out and things like that.
Like
where they're
mid-tax season.
updating.
Wow.
What happens is the preparers wind up catching errors. And we call up the tax, hey, your software is doing XYZ wrong. They go in, they correct it, they push out an update. God knows how many people have already filed and processed tax returns with incorrect information on it at that point. But
But that's why
you know,
that's why there are people called certified public accountants who can look at that and go,
we're supposed to check
"That's
and say,
wrong."
that's not right. Yeah.
That's awesome. So let's wrap. So it's Weiss Financial, or what's the website?
Well, for the accounting
For the
services,
accounting.
it's weissorostern.com. That's WEISS
Okay.
ORRO Stern STERN.com.
.com.
That's the accounting services website.
Now, do you
And,
only handle New York clients, or
No.
you'll
all over
handle
the country.
nationwide?
Yep.
Yeah.
Absolutely.
Okay. So if anybody needs an accountant, I recommend Steve.
I appreciate that. Thank you.
I think we demonstrated you know what the heck you're doing.
I have a screen up in front of me right now I've been reading off of.
Really? That would be having worked with Peter, I've gotten a real feel for how complex this is. Just like if
Yeah.
you were to hang out with me for 6 hours out of a year, you go, "Oh, I get a feel for how complex audio and video can be."
You'd make my eyes go crossed if you talk to me about any of that, because it's another language to me. So, and
That-
the tax stuff is the same thing.
Did you guys get your YouTube channel going? I know you were doing some Facebook.
Yeah, we actually had Scott's actually doing more of it on the financial planning end. He's doing a lot of Facebook lives. He's been producing his own videos for YouTube and things like that. I think you hooked him up and told him some equipment to buy for
That sounds like
for
me.
sound, right?
That sounds
Yeah,
like me.
I think you told him, gave him some recommendations to improve on like mic quality and stuff like that, and he's got a few other things, because I know the one video that you watched, it was like, you guys are a little close for comfort and right in front of the camera there. So he got some lenses and things like that so that we actually don't look like we're standing on top of the camera and sitting on each other's laps.
right. Well, that and it was like, you've got that monitor behind you. Put the logo up.
Yeah, right.
What are you doing?
Exactly.
Put the logo up. But
Exactly.
but you guys are doing it right. You guys are being accountants for the 21st century, which is really cool.
Yeah. We use a lot of for the accounting side and the financial services side. We use a lot of new technology and things like that. It's good for us. It creates efficiencies where we can continue to grow and not have our costs just go through the roof.
Yeah.
And on the other hand, if we can get the clients to buy in, which takes time. I mean, it could take years to get people to buy into the new way of doing things. But once they do, most of the time they realize, listen, we're giving you options here on how to interact with us. You don't have to do it one way over another, but we're giving you options. It's not, we're not changing everything. We're not pulling the rug out from underneath you, but we need to keep doing this because there's some people who want to do business this way. This is the 21st century. I've consulted with a young man out in California because he found Scott on some website, forwarded him to me. We did a video chat, and I gave him a little help with some advice for an employment thing. So, that's how we work.
Welcome to the new reality, right?
Yeah, right, exactly.
That's what I love about the internet. I mean, for example, you've seen the podcast, and I assume you've seen some of the music too, the Jazz Destroyers over the years. But we went to high school together, and then I moved 1,800 miles away.
Exactly.
How else would you have known what I still do?
I wouldn't have a clue.
I'd show up at the high school reunion and be like, "What are you doing?" And be like, "I'm a musician."
Right.
Oh.
But I wouldn't actually know what you're doing. I'd be like, "Oh, okay, you're a musician."
Yeah,
I wouldn't see you hanging out with Shia LaBeouf.
Shia LaBeouf and Farrah Abraham. She's going to be on an upcoming show. She was supposed to be. We were supposed to film that on Monday, but that got moved. So we're gonna have to figure out where we're rescheduling that right now. But we're gonna talk to Farrah Abraham from Teen Mom, and I'm gonna go out there. Apparently, MTV leaves some equipment with her, like she has lights, which makes life easy because I hate dragging lights around.
Where's she?
She's on the west side of town. I'm east. Like,
okay.
I'm trying to think of the best way to put it. Like, imagine I'm in Nyack and she's in like Eastchester.
Okay, gotcha.
You know what I mean?
Yeah.
It's a nightmare to get from here to there. It takes like an hour and change.
Ultimately, it's not really that far away, but it takes a long time to get there.
Because there's just no good way to... Because we have the same problem that you have up there, which is there's not a lot of good east-west.
Exactly.
But there's a lot of north-south.
Yep, we still have that exact same problem.
Yep.
And 287 still under construction.
So is 35.
Yeah, right.
It's a perpetual... Yep. You know, I don't know if you know him. I know one of the guys working over on the Tappan Zee Bridge.
Yeah, I know a few people that are actually working on the bridge. It's crazy how fast that went up.
I'm glad. It was the most dangerous bridge in America.
Yeah, but they screwed up. They were supposed to do a... You'll believe this again. They were supposed to do a train track on that bridge. That was the main part of that new bridge design, was to connect Rockland and Westchester so that...
Via rail.
People in Rockland could come across and then go down to Grand Central instead of having to go all the way out to Secaucus to then come into Penn Station. And after all of the design, all of the funding, everything like that, they scrapped that part of the project. And rumor has it that it was Westchester County that pushed to scrap it, because
it keeps
as soon as you make that
high.
connection, Rockland County becomes a much more... Not that it's a great place to live to begin with, but now people are going to start moving up to Rockland instead of Westchester, and you're going to have businesses moving over there. You're going to have the people who migrate up from the city eventually going to Rockland instead of Westchester County. So they pushed it and got it scrapped, apparently.
It drives me nuts.
The whole point of the bridge. I mean, that was a great idea, connecting the county with the train lines like that.
Yeah, I forget that on that side of the river, you really can't get into the city without going.
No, you have to use New Jersey Transit. Most of the people actually either take a bus or drive over to Tarrytown, park in Tarrytown, take the train down from Tarrytown. Yep. So, and the toll's going to be absurd, apparently. And they're
so up there, you guys don't have toll roads, but yeah, the the bridges are tolled really absurdly.
The throughways are all.
They did toll the throughway.
Yeah, but the bridge is going to be significant. I forgot what they said it's going to be one way. It's like $15 one way or something like that. But you know what they're doing too? It's not just the tap. They're raising all the bridges. It's already about $15 to go back and forth across
on GWB,
Throgs Neck, Whitestone, GW. But they're also, which is definitely angered a lot of people, they're going to raise the Bear Mountain. Bear Mountain's still only a couple bucks.
Yeah, that one is the one you go up to. You're like, I'm going to go across. I will drive all the way through Westchester to go
exactly.
Across
But now they're gonna jack that up too. So. Yep. Well-run state.
Well, and New York has the same problem that Texas has, but in the completely opposite way. In New York, the Democratic... Well, actually, the state's pretty heavily run by Republican anymore. But, the Democratic Party's so entrenched in New York that it becomes corrupt.
Well, basically, the city basically runs the whole state, so...
Right.
I
And
mean, you look at the population map and it's that bright red, I mean, that bright blue down in the city, and then the rest of the state, pretty much. You got pockets, Buffalo, stuff like that, places like that that are also, but the rest of the state's
yeah,
all
the
red.
college towns.
Yeah, exactly. Yeah, you're right.
The college towns. Oh, look, there's a little blue speck over around
Yeah,
Ithaca.
but you also, I mean, listen, there's a population density in New York City, Westchester, and Rockland. I mean, you can't get around that. So, unfortunately, they make the decisions for the rest of the state most of the time.
Yeah. I've contemplated going back.
Have you?
I have, cuz I
Yeah.
think you can still do USDA stuff in Putnam.
Okay.
Like out in Putnam Valley, there's still USDA mortgages available.
Right.
But then I look at them like, oh God, like remote Putnam Valley getting into work in the snow.
Yep.
Ugh.
You know what the problem is? The income from going from Texas to New York is not going to go up by the same percentage that your cost of living goes up. That's what the problem is. It's not dollar for dollar, and that's where you run into the issue.
Yeah, that's true. I mean,
It definitely goes up. You're going to get paid more for the same job, pretty much. You're not in California, anywhere else in the country compared to New York, you're probably going to get paid more in the tri-state area for that job, but your cost of living is going to be 40% higher than the increase in the pay will be.
Yeah, I mean that's the part I've had to describe it because people look at it and it's like, okay, because you walk them through and you're like, if you can make twice as much but pay twice as much,
Yeah.
you'll do it happily because your discretionary budget at the end of the day is much
As long
higher.
as you're living the same lifestyle and having the same comfort, then, why not?
Well, if it is linear, it's an increase in lifestyle because imagine if you have 10% of your money left over every month
Yep.
to play with.
Yep.
Well, that number, if you make $2,000 a month, is $200. But if you
Yep.
make $4,000 a month, it's $400.
Exactly.
And would you rather do the same job, live in about the same size house, and have $200 of play money or $400?
Right.
But like you said, it doesn't quite track linear.
No.
So maybe you still only have the 200.
The mentalities are completely different too. It's a never-ending grind, a never-ending hustle just to make ends meet half the time.
Yeah,
Uh,
which is
So
why the
mo-
music up there is so good.
I bet. Yeah.
That like if you think about it, if you're hustling $50 gigs to feed your
Yep.
family in New York City, you're going to play a lot of $50 gigs. You'll be
Yep.
playing 10 hours a day if you can help it.
Yep.
And you're going to get real good and then maybe, just maybe you don't have to play the $50 gig anymore.
Right.
That's how it goes in Austin too, except in Austin there's the threshold to break even is much lower.
I don't know if you said it, but I
It's
had
not
heard
as
somewhere
cheap as
that
it
there's
used to be.
there's starting to be a migration back out of Austin now all of a sudden.
We lose about 7%. It's a net positive population increase. Like we get about 9% come in, but 7% leave.
Okay, but that's slowed down, right? You had a lot higher net positive that was coming in for a while, right?
Yeah. And
Okay.
well, it's still pretty high, but
Okay.
it's still something like 60 people a day move to the city.
Jeez.
Net.
Jacking costs up.
Yeah, it's great because I own a house.
There you go. Yeah, right.
It's really great. It's really, really great.
As long as you got in at the right time, right?
I got in. Not only did I get in at the right time, I got in at a time when the government gave me money to go buy a house.
There you go.
It was the very bottom of the market, and the government said, we'll give you $8,000 to buy a house.
Okay.
If you go buy a house, you'll get $8,000 on your next tax.
Yeah, I remember. Yep.
And we did.
And you got in at the right time too, because if you did it a year earlier, you would have had to pay it back.
Really?
Yep. The initial tax credit was $7,500, and you paid it back over 15 years. And then the next year, they changed it to $8,000, and you didn't have to pay it back ever.
Yeah. Well, for us, I didn't even know there was that difference, right? I just knew that the housing market was so low that they were like giving money away to encourage people who
Right.
could possibly afford to still. The few people who could still afford a house, they were like, we will incentivize you to do that.
Exactly.
And we weren't quite ready. right, while they were doing that. And then we got broken into in our apartment, and it was like, all right, let's go.
Let's get out of here.
Let's go. How it's that cheap. We have to be able to make it work. And
Right.
man, it was I know for everybody buying a house is hard. My father's described real estate as the hardest purchase you will ever make. It's the biggest purchase you'll ever make, but they make it so hard to complete the process.
Mm-hmm.
But in our situation, it was even worse because there weren't actually that many homes for sale.
Right.
There were for sale signs on every third house, but none of them were actually for sale.
Right.
They were trying to do these things called a short sale where they get an offer from
They're
a
trying
buyer.
to get out from underneath their mortgage, basically.
Right.
They're asking the bank, let me sell my house for less than what I owe on it. The bank approves it, but then the bank sits on the paperwork for 6 months to a year or longer, and eventually the deal falls through.
Right. Well,
And your deposit's locked up in the meantime.
and your deposit's locked up, but the other thing that was going on was the short sales that were available, that the numbers made sense. You'd make an offer, and a guy with cash would come in and buy it.
Right.
Because the bank doesn't really want to mess with some, I'm mortgaging this and I'm going to ask you to pay the closing costs, blah, blah, blah. Guy comes and goes, here's the cash.
Well, the best was initially the banks didn't have to tell the homeowner what price they'd be willing to accept. So the homeowner would accept the deal, and then the bank would
deliberate,
would reject it later on. Right. So then there was new rules that said if you're going to approve a short sale, you have to tell the homeowner what's the lowest amount that you're willing to take, basically. So that did make it a little better. And they also said they passed the rule that I think they had. I don't know if this was just New York or if this was nationwide, but a short sale, you have 3 months to give an answer, basically. When they're sitting on paperwork and you have someone trying to buy the house and you're locking up someone's deposit, they told them, you have to make a decision on this one way or another within 3 months. I had friends that they did get the house, but they sat on this deal for
ever.
I think it was 14 months, maybe longer, something like that, where they had a deposit locked up, everything like that. And what happened? You renege on the deal and you try to walk away, and they keep your deposit.
Yep.
That's the crazy part. So you have other houses you're looking at, and you can't go and make an offer on any of those houses. You're watching other houses around you get swallowed up and taken out from underneath you because you're sitting on this short sale. So it's a tricky situation. It's better now, but even now you need to be willing to say, I really want this house, and I have time to wait, and I don't have to move. I don't need to buy this house. I can wait this out.
Well, with us, we'd put offers in. We couldn't get anything to stick. I think we made four offers.
I think Renee and I looked for a place to buy for probably, I think it was 6 or 7 years before we finally got something.
Oh.
And it was on and off. We'd look at condos, we'd look at co-ops, we'd change and start looking at some houses, and we'd go back and forth on things. We'd made offers. We had houses we made offers on that just wound up going into foreclosure instead of accepting our offer. And then just ultimately we wound up kind of lucking out. I mean, we moved to Harrison, but we bought a 2-family house. So
that's the way to do it.
Yeah. I mean, we wouldn't have been able to afford to buy a single family house down in Harrison. But like I was saying, the rents are insane. I mean, I'm also 3/4 of a mile from the train station in Harrison, which is a 32-minute commute to Manhattan. So
yeah,
you can walk to the train from my house. That makes it a great rental. I think I'm a pretty good landlord. I take care of things whenever they ask me to. So
you fix it. You're not too loud. Yeah.
Yeah, and it worked out too because, like I said, Renee's from out east on Long Island, so not going too far up the line back where we live made it a little better, easier to swallow for her. So, and she likes it now. She's a Westchester girl.
I really miss it. I have to point out to a lot of people, I didn't really understand what poverty looked like because there just isn't. I mean, there's poor people in Westchester, but there's
you see it in some areas.
No.
Not like you see down in Texas.
Oh,
right?
God, no. You see things where you're like, somebody actually lives in that?
Right.
Like busted windows, leaning the walls it looks like it could collapse at any minute.
Right.
And people live in
You know
it.
where I actually saw a decent amount of that was when I went up to school up in Albany.
Yeah,
And
up in rural New York, you'll see it too.
yeah, I mean, even in the city of Albany, where all the college kids lived. I mean, even the houses we lived in as college kids that we were renting out, they should have been condemned. Some of these houses, you know,
Yep.
my from my kitchen to my living room, there was actually like a 30-degree decline in the floor where I'm sitting there going, this can't possibly be structurally safe. I think this house is collapsing in on itself. I think, you know, we had. Either there was houses up there. I think they did a study at one point. It was just after I was done with school, but I saw some sort of news article or something, a report that was shared on Facebook or something like that, where they said 80% or something like that of those houses in that part of Albany are condemnable. Like they should not be lived in. They should be condemned, but they just don't do anything about it. Well, what are you going to do? You're going to kick out 80% of the residents that are living in the area? What can you do at that point?
Well, relocation assistance would
Yeah.
have to be part of it. It would be an expensive process to do something about it.
I could imagine it definitely would be, but it's bad. Yeah, I mean, that's where I saw a lot of that, where you're just looking, going, I can't believe anybody lives in these houses, and they were like a tinderbox too.
Yep.
I mean, how many times we saw it happen right 2 houses down from where I was living my senior year. Walked outside and one house was on fire and it spread to the next house because there was literally about 3 feet in between each house that the property line was in between, and it just two or three houses just up in flames. And you know what? There was people living back in them within like 2 weeks. I mean, how that's possible, I have no idea, but they just did whatever they have to do, and people were right back in those houses.
Well, they were probably moving back in before it was safe. We had
I guarantee it.
we had a house fire in the neighborhood here, and I think they had to go live in a hotel for 6 months while they were
Wow.
doing the cleanup work.
Yeah.
So I think it took them a while to sort it out with the insurance to actually get the work started.
That's
Because
what
that's how that
causes the
goes.
delays. That's
Yeah.
what causes the delays most of the time. The insurance company doesn't want to pay out on that claim, especially when it destroys the whole house. And you would think that, all right, my house burnt down, I should be able to just get started right away on cleanup and rebuilding, but it takes months just to sort everything out with the insurance company.
Ugh, it's a plague on society. All right. So thank you for joining us. We're going to make sure we put a link to your website in the
I
description of this video.
appreciate that.
If anybody's looking for a good accountant, this is the guy to talk to, obviously.
I
So,
appreciate that.
so Steve, thank you for joining us on the show. And on that note,